Welcome to Traders Corner. As always, I'm joined by Garth McKenzie, founder and editor of Traders Corner. Garth, welcome.
Hi, Julieta.
Garth, Wayne McCurry comes in every Wednesday night and he's very fond of saying that it's never killed anyone to take a profit. Yeah. And tonight it's all about banking profits and going heavy on cash. And let's start off with maybe one of the shares that has been, you've had a long position in it for quite a while, and that's Aspen. And I know quite a lot of people were a bit worried about what's been happening to Aspen. So I'm curious to see how it worked out for the portfolio.
Yes, we've actually taken profits on Aspen this week. So we've made a nice profit on it. Certainly it hasn't performed as well as I was hoping for this trade, but nevertheless we've taken a nice profit. If we quickly have a look at the setup, why I liked it, there were two strong support levels which come in. Now that uptrend goes back a long way. It goes back about 4 years. Obviously much further back than what this chart shows you. And then, of course, we've got that lateral support level there at about 370 Rand, which we saw the stock pulling back to that level in March. And it came on the back of GlaxoSmithKline selling out a stake in the company, and there was a big book build exercise, and that created a bit of a short-term overhang of shares in the market, which pushed the price down to that 370 Rand support area. And I felt at the time that that was a good area to look to buy, and we did buy. We bought 350 CFDs for the portfolio at 376 Rand. Stop loss was 359 Rand, and I was looking for a move to 420 Rand here. Now, that hasn't happened, and I looked at it, and the gut feel was that this share price just wasn't responding as well as I would have liked it to be responding in such a strong stock. And it did, for a week or two, it sort of bothered me that it wasn't moving up as strongly as the rest of the market was, but we held on. Nevertheless, what finally got me out was, if you have a look, there's a little short-term uptrend there that goes back to basically the low of March, where we bought the stock.
Yeah.
And the share price had been hugging that little short-term uptrend the whole way. But finally, when it broke down below that uptrend, I decided, well, that's now time to actually exit this trade.
Yeah.
And we sold out at 399 Rand and 60 cents. So a lot earlier than what our profit was expected to be. I mean, we made about half of what I suppose I was hoping to make here. If we were looking for a move to 420, well, we sold out 20 Rand short of that. But nevertheless, we made a decent profit, 7,500 Rand after costs were taken into consideration. And in retrospect now, it's clear that selling out was the right thing to do. I mean, today, the share's trading back down close to 370 Rand again. And I know a lot of people are going to look at that chart and say, well, that looks like a head and shoulders pattern.
Yeah.
And yes, it does look like a head and shoulders pattern.
In fact, it looks like what you might use as an example of a head and shoulders pattern.
Yeah, it's pretty textbook. But, you know, typically people would see a head and shoulders pattern as being a topping out pattern, and then it breaks that neckline and it goes a whole bunch lower. I really, really will be very surprised if this head and shoulders pattern plays out like that.
Why?
Because Aspen is a pretty strong stock, and it's done this in the past. It's made head and shoulders patterns that have failed in the past. And actually what needs to be taken into consideration here is that a failed head and shoulders pattern actually is quite a bullish setup. So what I'm going to be looking for in the weeks ahead now is if it goes back and it trades under 370, maybe it goes and flashes out a whole bunch of long positions down to 360, 350 even, that sort of area. I think if we get a sharp sell-off down to that area and then a nice powerful reversal back up from there, I'd probably look at that as a buying opportunity.
Okay.
So that's definitely something to keep in mind. I'd be hell of a surprised if this head and shoulders pattern actually plays out and it goes all the way down to the downside target, which would be, you know, somewhere in the lower 300s. I'd be very surprised if that happened.
Garth, so Aspen might not have been, you know, it might have got a 3 out of 5, but Reinet was a very strong performance for the portfolio, and it looks as if it did exactly what you wanted it to.
Yes, the Reinet's absolutely perfect trade. It's done exactly what we wanted it to do in terms of the strategy. If you look at the chart that's on the screen now, we identified the trade opportunity when the stock pulled back to the uptrend support there, which was at about 24.50. And we went long of 6,500 CFDs for our portfolio on a reversal up off of that support level. We went long at 24.60 with a stop loss of 23.90, and we were looking for a move to 26.50. And that basically would have meant that we'd see the share price trading back up towards those recent highs. And that's exactly what happened. We got our move to 26.50. It went a little bit beyond that level, but we banked the profit at 26.50 and exactly in accordance with the strategy. And that worked out very nicely, and we took a profit there of 10,725 Rand after all brokerage and financing costs and whatnot were taken into consideration. So that was a great trade. I mean, it's absolutely perfect to the strategy. And it was nice. It also took about 3 weeks, less than 3 weeks to work out. And what I've always said is that the best trades typically get off to a good start and they work out quite quickly.
Yeah, which was one of the problems with Aspen, is that it suddenly started dragging. And yeah, there was a moment, I suppose you didn't really know what was happening, and then it started selling off. So is Reinet something that you might expect to come back to that sort of uptrend support line? And I don't know.
It very well might. I mean, if you look at that chart, that goes back basically a year, and you can see that mostly it's really just been sideways, choppy trading action. So it's up towards the higher end of that trading range at the moment. It is overbought. Who's to say it doesn't have a retracement from these sort of levels? I'm not 100% sure. I mean, I'm certainly not going to rush out and put a new trade on in the stock at these levels, but it's been range bound for the last year, and as things stand, I guess we've got to just assume that that's the way it's going to stay for the time being.
Yeah, well, nice to make over 10,000 Rand on a range-bound stock. Garth, now moving to the first losing trade of the year, not a bad performance to be almost 5 months in. You actually haven't had any losing trades for the portfolio, but it was the property stock. I was always rather curious at you going into this trade, simply because I don't necessarily think property stocks are that exciting, but it was resilient and it doesn't seem to have done what you were hoping it to do.
No, it hasn't. And regarding the first losing trade of the year, it's the first losing. You know, we set out to try and get 6 out of 10 trades right on this show, and we've done way better than that so far for the year to date. But I knew there was a losing trade coming, and there will be others. There's no doubt about that. But anyway, this is the first one of the year. And fortunately, it was actually a very small trade. We took a very, very small position in Resilient. It hasn't worked out, but we've lost a bit of money, but really nothing serious. If we have a look at it, you can see the chart that's up on the screen at the moment. What I'd identified was this upward sloping channel that's been evident over the since the beginning of 2015, really. And I was looking at it and saying, well, there's positive reverse divergence on that chart. That is where your stochastic oscillator makes a lower low. In other words, it's more oversold now than what it was on the previous time that it pulled back in the rising trend. And typically those setups are quite bullish, and they do normally push up or break to the upside. So that's what I was looking for here. Also, part of my rationale was the fact that Resilient is one of the most commonly shorted property stocks in our market. And because of that, very often you do see these short squeezes which tend to push the price higher. And I thought that we off the bottom of the channel, we've got the positive reverse divergence, et cetera, et cetera. Those are good enough reasons to expect another short squeeze to materialize. It didn't work out that way. Anyway, we went long of 1,000 CFDs at 104 Rand 20. The stop loss was 102, and we were looking for a move up to the top of that channel at about 110 Rand. Now, as you can see, the price has now broken to the downside below that channel over the last day or two. So that meant that our stop loss was triggered. We got out at 101 Rand 90, so just a little bit below our actual stop loss level. You remember that I always use manual stop losses, not automatic stop losses. So hence there's a bit of slippage here and there. But nonetheless, that's not too bad. And what it meant was that we lost 2,800 Rand after all transaction costs were taken into consideration. So it's not serious. It works out at about 0.8% of the value of our portfolio.
Yeah.
So in terms of a loss, it's very, very small. And if you're going to be losing it when it comes to trading, if you're going to lose, you want to lose as little as possible when you are wrong. Yeah,
keep your losses small and your winners grand. Yeah. Garth, okay, so that takes into account the 3 trades that you've exited over the last week or so. Now, where are we at? Because the market has been steaming along, and it's all of a sudden it seems to be the resources shares that are taking us here. Yeah. But it has been quite extreme. So what do you make of the market's current exuberance?
Yeah, well, I mean, if we look at the chart of the top 40 now, we've looked at this in each of the last couple of weeks, but it's been interesting to track it from week to week to see how it's doing. You know, the big thing I've highlighted in previous weeks was this overhead resistance at 47,200, and you can see how the market bumped up against that level in July last year, and again in February this year and in March, and now finally in the last 2 weeks or so, we've actually seen it breaking out to the top side. You could also argue that there was a little flag type of structure there, or nice flag consolidation through February and March, which is also now broken to the top side. So, you know, that is a bullish breakout. There's no doubt about that. The market's broken to new highs, but it's also very, very overbought now. And I would expect that we'll see some consolidation from these levels, or it might go a little bit higher and then consolidate. But the bottom line is that it's very, very overbought now. And I think that chasing the market at these levels is probably not going to yield you a very good risk to reward ratio. And that's part of the reason also this week why we've gone very heavily into cash. I just feel that chasing this market up at these levels is not a good idea. We quite feasibly could see a pullback towards that 47,000 area to come back and retest that support zone, which is where the breakout occurred. And that would be a good thing. But for it to continue up at this type of trajectory, I don't think is a reasonable expectation. So from that point of view, I do think a little bit of short-term caution is advisable. But that's in the context of an overall market that's looked pretty strong.
Garth, and what do you make of the composition of the stocks that are leading the charge? It's mainly the resources shares, and they've had an unbelievable week. And today we've seen again with the iron ore producers, but particularly the platinum companies. I said earlier, it looks like a huge short squeeze. So this must suggest it's a little bit, not unnatural, but just a little bit exaggerated what we're experiencing. Yeah,
when you see really big moves like we're seeing in the resources stocks, that often is driven by short covering. So I think that's probably part of why we're seeing this market push up as high as it is now.
Garth, so you've banked a couple of juicy profits this week, taken one little loss. So as you said, you're heavy in cash at the moment, but you've actually put an option structure on for the portfolio, but you're going to tell us about it next week.
Yes, that's right. I've actually this afternoon executed an options trade, another option structure, in addition to the one that we've currently got on. Remember, well, we'll talk about it in a moment when we look at the portfolio, but it's an option structure on the top 40, which gives us participation if the market goes below 46,500. That's the existing structure that we've got on. Yeah. Now, I've done another structure this week, which will complement that one quite nicely and give us downside participation from a higher level. And we'll talk about that on next week's show.
Okay, so you'll extend the protection that you have conceivably if there is a bit of a correction, which wouldn't be unwarranted at this point.
It wouldn't be unwarranted at this point, definitely not. And also, keep in mind as well that we're going into that time of the year when the markets can be bumpy. Sell in May and go away. And I know it doesn't always work, and it's a bit of an old-fashioned statement but these days, but it does still have some relevance these days, and you can't ignore that.
Okay, guys, so what does the portfolio look like given all the activity that has transpired over the past week or so?
All right, well, these are all the open trades that we've had on the portfolio, which many of them have now been closed out. Obviously, we've got our current option structure still working in the background for us there. Aspen, we took 7,500 Rand profit. Reinet, 10,700 Rand profit. And then Resilient, we lost 2,800 Rand. Our portfolio is sitting at 318,000 Rand, so that's another new high for the year. It's up 27.5% for the year to date. And now we're sitting in a nice position because we're very cash flush. With the market at quite overbought levels. So I'm quite comfortable with where we're at right now.
Yeah, it would be nice maybe to see a bit of a correction and then start picking up some unwanted darlings.
That would be ideal.
Garth, we'll have to leave it there. We'll see you next week. Thanks as always for joining us. Garth McKenzie is, of course, founder and editor of Traders Corner.